What's up, everyone? Marcus here with your not so weekly tax tip. So, I was watching Wheel of Fortune the other night, and one of the winners won over $60,000 in cash and prizes. And as someone who thinks about taxes way more than the average person, it had me thinking about the taxability of prizes, right? So, when you win a prize, there are really two winners, you and Uncle Sam. So, should you be fortunate enough to win that trip of a lifetime to the French Riviera in your new yacht, here is what you need to know. Number one, prizes are taxable. Almost all prizes are taxable income. You report them on your income tax return as other income. This is the case whether your prize is cash, merchandise, trips, or free services. Prizes valued at $600 or more must be reported to the IRS. Prize values below this reporting threshold may also be reported at the discretion of the sponsor of your prize. So even if you get a prize for $500, they may still report it to the IRS. Now, as the winner, you should always look to receive a Form 1099 miscellaneous, or if you pick the winning horse at Churchill Downs, you get one of those tax tickets when you win big. Employee awards are different. So when you receive a prize or something of value from your employer, different rules do apply. These fall under business expenses, fringe benefits, and award rules. So things like a holiday turkey or occasional service awards are often, but not always, a non-taxable prize. On the other hand, a bonus or prize points for merchandise as a sales award usually needs to be reported as income. And so gifts and prizes, they have different tax rules. A different part of the tax code applies to gifts. So gifts received from someone that are less than the annual gift threshold are not deemed prizes. All right. Some other things you should think about. Should you receive a prize during the year, here are some tips to consider. Number one, you might want to donate it to charity. If you wish to avoid paying tax on the prize, you can refuse the prize, or you can opt to donate the prize to a charity. It is best to sign appropriate paperwork to assign ownership of the prize to the charity and have the prize sent directly to them so you don't receive it first and end up being taxed on it. All right. You also should establish fair market value. If you win some property, like a car or a vacation trip, establish the fair market value of what you won. Host a prize contest, often overvalue the prize to aid in their marketing. You do not want to pay tax on an overinflated value. So if you win merchandise, get copies of the advertisements for the item. If it's a trip, document hotel rates, transportation costs, and cost of meals to build a case for a lower fair market value. If there's a discrepancy with the value received, show your documentation to the provider of the prize and get your Form 1099 miscellaneous corrected. And then, of course, you should always, when we're dealing with the IRS and taxes, you should always keep good records. When you win a prize, fill out a sheet outlining the details of the event, record the identity of the sponsor, the date, detailed description of what was won, copies of the documentation, photos of the items won, and the approximate retail value assigned to the prize from that sponsor, so to speak. And then, of course, it's always good to plan. Using the value provided to you by the sponsor or whoever you won the prize from, determine if you will be able to pay the tax for the prize. You may need to plan to make an estimated tax payment to avoid any kind of surprises when you file your tax return. So remember, should you be lucky enough to win a prize, ask for help to determine what steps need to be taken to manage your tax obligation. So the next time you're at the track or at the gambling boat and you win big, know that Uncle Sam is just as excited as you are. Until next time.